by becoming rich.
Take all your money, buy Bitcoin.
I said when we sell.
Wake up every morning and say GM.
GM. GM. Today is Monday, 9th of September. Daily levels. Let's go. So, new week beginning. And I'll start off by zooming out to the weekly. So, positives. Closed above the 50-week EMA again. Negative. Weekly bands are red and crossing. Negative. BOS, break of structure. So we made a slightly lower low on the weekly. And that's about it. See you tomorrow. So I do remember, if we're going for max hopium, I do remember these structure breaks here back in 2023. The lowest close at that point was around 25,950, and we had some closes below that. Only by a couple of dollars, but you can see there was a definite technical market structure break, or BOS I would call it, on the weekly at that point, which of course ended up not coming through. Difference being this one is much more pronounced. This is not the first either. We've had a couple now, and we're at much higher prices and taking out the all-time high. You know, a lot of it's different. We also have a very wide, expansive weekly trend. And that's something as well I should probably talk about. When you see such a strong trend start to fail, right? So the way moving averages work is they take, as the name would suggest, they take the, excuse me, fucking hell. They take the average price over a certain period. If it's an EMA like this, it prioritizes and puts more weight on the more recent part. So if you've got a 10 EMA, it's going to give more weighting towards the most recent 2, 3 or 4 candles rather than all 10, which is simple moving average, just is the average of all 10. So if a 12 and a 21, you know that, they're the bands, then a 50, 100 and 200. So when the market, or when the trend, I guess, is slowing, and when it's such a wide, expansive trend, you can expect this to lead to basically what we have, which is further consolidation or chop. Such strong trends with such a dispersion between the bands, especially when that trend weakens, you know, when the actual impulse disappears, it can take a long time for the bands to sort of catch up, is kind of how you view it. And, you know, especially on the weekly, what is a trend expectation when it comes back to the weekly? Right. Well, when we came back to the 50-week EMA for the first time in 2021, the bull market was over. We had to bounce back up to the highs, but there was no continuation of that weekly trend. At that point, though, how long had we been in a weekly uptrend for? If we're looking at all the way over here, I mean, Bitcoin had been in a weekly uptrend almost uninterrupted since the last bull market, which is quite fucking extraordinary, to be honest. That never properly crossed. So we had been in a 50, 100, 200 weekly EMA trend since 2015. Call it 2016. January 2016. 50 above 100 above 200 on the weekly. All the way. This bear market, it does not close below. They do not cross. So all the way through 2017 bull, through 2020, and right into 2021. And then we get our cross. And they cross bearish in August 2022. They cross back bullish at the end of last year. So you can see how in the past we've had literally entire bear markets without those bands crossing. It's how slow they move in a relative basis. We had literally an entire bear market without those bands ever crossing. So looking at like Bitcoin pulling back into the 50, you're like, oh, this is time to buy, let's go. I mean, I wouldn't say so. Right. Now, losing the 50-week EMA is not good. And it doesn't mean we're going straight to zero. It doesn't really have to mean anything particularly. But if you're using it as sort of a trend indication, and we do have that sort of here, I would say it's semi-important. I don't know how many people are just bidding their life out on the 50-week EMA, but definitely seems to have some kind of support at the moment. And then we zoom in. All right, let's go into the daily. Obviously, daily trend is lost. The 50 has crossed the 100 already. It's about to cross the 200 on the EMAs. That, again, typically leads to some chop. Right, whenever they stop trading as a trend and they cross, you see some kind of chop around that area and compression, and then it gets back above, we get back into the 50, 100, 200, and then we go again. So if you're looking at, again, this all aligns with what I talked about yesterday on Weekly Outlook. If that were to happen, if you were to see what you would want to see there, you would see price coming up and probably squeezing and chopping around this kind of 60k area for a while, then flipping it, going to 65 towards 70, and then you get the bands back in line, 50, 100, 200, and it would be a breakout along with the volume profile, along with the market structure break, right, from the highest, from the point we've been making lower highs, lower highs, lower highs, lower highs. Break above that, we stop doing that. A lot of confluence up there. So if we assume it goes there at some point, right, let's assume Bitcoin goes to 70k at some point, and we don't know where it goes in between. How do we actually trade it? That's where I'd be looking at. Well, from a higher time frame perspective, if you think it's going to go to 70, whether it actually goes to 70 or not, you would assume it's going to attempt to get to 70, right? So let me just find this other chart here. Pretty much this path. If you think it's going to go to 70 and then become bullish, or if you're a bear and you think it's not going to go to 70, it's going to go to 0, in both of those scenarios, it should at least try, right? A bear who thinks that it just has to go straight down, you're playing with fire there. So I would say at some point, Bitcoin's going to at least attempt to reclaim that trend. Now, if it's really bearish, it does that. If it's kind of distribution still, it might flip it and have another fake out. And of course, if it's bullish, it flips them, we go to 70, we go to the moon. All of those paths would converge around this price. So I don't think it's crazy to expect Bitcoin to try and push towards 60k again and reclaim. Now, question is, how does it get there? Go straight there? Or do we go down first? And that's what I'm looking at the moment. This has a potential to come down and sweep. I don't see so much lower time frame weakness just yet. And on trade of the day, I'll break down how exactly to trade this. But what we've seen is a bearish close on Friday. So we had a bearish week overall, where we opened at 57, we closed at around 53,850 on the Friday. And then we had the weekend where we had 2 green candles. And then on Monday, quite early today, we've taken out that high. Too early to say whether that's a failed breakout yet. Obviously, as it stands right now, it's a failed breakout, as price has gone above and is back below, but I wouldn't call that definitively just yet. If we do see that, it can be quite a typical week, new week sort of movement, where you clear out some highs at the beginning of the week, you push down, you take out some lows, and then you begin your rally proper. Or it takes out that side and maybe takes out just the weekend lows. Maybe it doesn't go right the way to the wick, but we'll be watching for that. If not, I think BTC will just continue higher, which if we look at all the way over here, got a 4-hour candle gap that I was mentioning. I talked about this on trade of the day, I think it was yesterday, wasn't it? How we had a 4-hour candle that had formed a gap over here. Let me take some of this stuff off. This 4-hour candle here to here. So that was originally a gap that we had on the chart. You can see it here. So it formed through this breakdown candle and ended at that wick, and then we went lower, and then we started to fill it in. And I mentioned, when you start to fill in, you come back, you keep filling in, you come back. As you start to fill gaps in, once you climb back into them, you tend to fill them. And we've pushed through it, and we've pretty much filled it to this point. Maybe there's another little push higher to come. but that's completed at least one sort of retest of inefficiency. And question then becomes, how long does it spend in this area? Does it reject? Does it move back down from here? Because if it does, you got some areas below that are untested. This is Friday's New York close. So this is where the proper trading week ended last week. So that's an area to watch for sure. As typically, you could expect the market to retrace back down to that level in the following week. And it seems like that's pretty much what we've seen so far, is a very aggressive squeeze over the weekend, which always happens after we've had bearish weeks, right? The most aggressive squeezes you see on the weekend is when we have a really bad end to the week, red Thursday, red Friday, but a really aggressive kind of emotional, big liquidation candle, big sell-off, sentiment really flips. And then you have this painful sort of grinding higher throughout the weekend as people who are still short get squeezed, but not like aggressively, like slowly. And then anyone who keeps short and gets blown out and blown out and blown out. So the nature of the price action so far to me seems more like it's moving up to punish shorts predominantly. I'm not sure how much underlying demand is beneath that. But also, we don't know how far the short squeeze could go. It could go significantly higher. This is why market structure breaks matter so much. It has to get above Friday's breakdown level to be considered strong again. Otherwise, it's just a gap. And the gap forms because there's a lot of heavy selling, right? So there's a lot of supply and demand imbalance. There's a lot of activity on one side of the market, which in this case is selling. So there's a mass amount of selling all at once. And then the market moves back towards that and can fill much of that gap without filling all of it and still retain its initial impulse trend. Right? The move is down. The proper selling was here. The retracement, the retest, the squeeze, the chop, the consolidation, all of that. If it doesn't get back above the origin of the breakdown, then it's not bullish. And same goes on the other side. So you're watching the nature of this. If this starts to turn around, roll over, whatever you want to call it, that's the time to actually look at it going lower. I wouldn't say there's any reason to expect this to go lower just yet or short. There's a potential false breakout there, but it's doing this sort of moving its way up through the bands. Now the bands, of course, are bearish. You expect bearish 1 hour trend to remain that way until there is some kind of shift. The 50 is trying to turn upwards, so that's an early sign. Where the EMA is starting to inflect upwards. So the faster moving EMA is moving upwards on the 1 hour, which would indicate an immediate 1 hour uptrend. But the 100 and the 200 are still pretty bearish. We haven't even retested 200 yet. Maybe we will, maybe we won't. What you're looking at for all of this, the absolute, if you're looking at when is this going to go, is this just taking out the highs, squeezing over the weekend and we're going to new lows? It's probably when we lose all of this. I would say when we lose, if and when we lose 54.6. That's when you look at new lows. I want to look at the stock market too, because since a very bearish Friday for stocks as well, and then we have this overnight since the futures market's open, it's just been squeezing higher, which quite often retraces when it gets to the proper session. Again, if you're looking at, especially in stocks, the only times that matter in terms of heavy flows or proper flows, I would say, is when the New York session is actually open, which is 1:30 UTC to 8 p.m. UTC. And when you see this overnight, again, same thing. It's like anyone who didn't close or take profit on Friday is just getting squeezed in the overnight market. Just sort of pressure being put on. And when we get past, the actual session open, then we'll see if there's any underlying flows in there. What else? That's about it. I'm checking the dollar, actually. It's been a while. Yeah, dollar rallying. So after all the kind of dollar bullishness, meaning a weak dollar is good for risky assets, it hasn't taken out the lows. It needs to go below there and trend lower. Now it is heading that way, like it is angling there from a higher time frame perspective, but Nothing to stop the dollar kind of chopping around here a bit longer before breaking down, which might make sense if you're thinking that maybe the immediate bull is not here, but we have a few more months to come. That would make sense. And that would be based on, probably, I would guess the dollar's not going to do much until the election is over. Because there's going to be a big difference in whether there's a weak or strong dollar based on whether Trump or Harris wins. And typically, sustained dollar weakness is pretty good for crypto. And that's it, GM. 2 streams today. Ask Michael at 4 UTC. And Blue Belts, Mentorship Monday, 6 p.m. UTC. GM.